It's about that time, isn't it?
That's the IRS train wreck of the week you just heard.
So in this particular case, what had happened was an older lady came into the office, and she had a pretty good sized tax liability spread out over several years. And when I asked her, well, what caused you to owe the tax money? It's a very common question that I ask clients, because sometimes I can go back and kind of fix the problem at the source. She told me, well, I had a big 1099-C for cancellation of debt in this particular tax year. And I said, really? That's interesting. So how did that come about? She said, well, I don't really know. I had a first mortgage on my house, and I had a second mortgage or a home equity line of credit. I can't remember which it was. And she said, just out of the blue, I think it was Bank of America, just wrote it off. And I got a 1099-C. And then when I prepared my tax return, I had to pay the tax on that cancellation of debt, which is kind of crazy, but that's what the law is. And so she's like, so now I owe $29,000 for that tax year. I thought about it. I asked her a few more questions, and we were able to identify that she actually qualified for an exemption from paying the tax on that 1099-C cancellation of debt called qualified principal residence. So we went ahead and amended the tax return, and we took that tax off, and it reduced her tax bill by $26,000. And the IRS actually rejected the amended return. So now what? I mean, most taxpayers at this point go, that didn't work. We lose, and we're going to have to pay the bill. Well, I didn't like that answer for this particular taxpayer. So what I did is I went ahead and I went to the taxpayer advocate, and I just did a do-over. Basically, I explained in simpler terms this time what the situation was. And after about a year and a half, just this past week, we got the news from the IRS that they had written off that $26,000 of excess tax that she really wasn't liable for.